Anand Tandon, who's an independent analyst, is joining us on the show. Anand, hi, thanks so much for joining us on the show. When I take a look at the December move coming in for the FMCG index, not done anything at all, down about 2.5%. And you have one of the biggest losers on the month-to-date basis, also Godrej Consumer is down 14.5%. Give us a sense of what you're making of the entire FMCG space. Do you believe that this recent correction that the space has seen makes it attractive, or do you think that the problems that they are flagging off in terms of urban demand slowing down or input cost inflation still persisting around, do you think you should still wait and watch further, or now would be a good time to make a fresh entry into the stocks?
Well, if you are looking at it from a portfolio perspective, FMCG has to have some space in it. You cannot be exiting it completely. More importantly, the construct that you have going forward is that you are expecting to see rural demand pick up, and that is where most of these companies like the Hindustan Levers, Davos of the world actually have the best positioning, because that is where they get much of their market from. More importantly, that is where they get most of their growth from. And also that is the one place where the competition from this quick service and so on, which will tend to reduce margins for these companies, is probably a little lower. So if the basic construct of the market is that we are expecting to see a growth in the consumption, especially in rural India, coming back in on the back of better monsoons, etc., then I think this may be a good time to start looking at that sector. It doesn't mean it will do anything dramatic, but the fact is that the market is so overpriced that it is not likely to do anything dramatic as a whole. So you may still get some outperformance from here going forward.
Right. Good afternoon, Mr. Tandon. Cheryl also joining in the conversation. Just I wanted to understand your take now when it comes to these investments in the new age tech counters, because we've seen a lot of them actually participate in a rally. They saw a dip, then you saw a comeback of all of these counters. How should one take a look at this entire space in the year 2025?
Well, these are difficult markets to be looking at some of these companies, because clearly, while on the one hand, most of so first of all, that's a very wide space, right? So let us look at, for example, the ones which are the favorite right now, which is the quick service companies. Now, those are companies which, because the top line is growing, the market is willing to pay any amount of money. But the reality is that you are looking at a very competitive space, which you have seen some reasonable amount of penetration, but I don't think that the penetration can go beyond a certain level. And more importantly, the costs for delivery in smaller cities will be quite much higher. So you are going to get a lot more competition in the space that you are already in, which is the top few cities of the country. Can it continue to grow? Yes. Has the market priced most of it? I would argue yes. So if you are looking at those kind of companies, maybe it is time to start, at least getting a little cautious about where the valuations can stretch up to. However, there are other places. For example, there are some platform companies which have come through on the travel side, which are doing exceedingly well in the market of late, where I think there may be a little more upside left, only because of the fact that you are looking at a season. Plus, there is a kind of margin lever that you have as the business, for example, moves towards more hotels and less tickets. Some of these companies will do very well. So, companies like Go or TBO Tech and so on, which have the ability to increase their margins, etc., can actually perhaps do a little better, and they are not as expensively priced as some of the others. So it's a question of which theme you're willing to back. I think overall the sector is fairly very expensive, but there will be a few winners, obviously, and the ability to pick out which of those is what's going to determine it, which is a bit of a it's a difficult problem to look at. But broadly, I think you have to be careful about which ones you are going to be backing. Not all of them will do well, and the likelihood is only those which are able to maintain margins is the ones that you should be looking for.
Specific approach is the one Anand is recommended when it comes to the new age tech space. But is there more room for growth when it comes to these new age tech companies? Let's go across and listen into the word coming in from Prakash Khemka, White Oak Capital Management, Professor Sanjay Bakshi, and Manish Sunthalia as well, Director and Chief Investment Officer of MK Investment Managers, and what they're making about the entire new age space and the outlook going ahead.
This space is bound to see a huge explosion of companies and business models over the next 5, 10 years or whatever, 3 years, whatever time frame you see. As a proportion of the index is bound to multiply from whatever low single digit it is today to first double digit and then potentially 20+% as it is in many of these countries.
So for me, in new age companies that haven't been around for a long time and have not already become very profitable is not something that I would be interested in. That doesn't mean that other investors are wrong when they're investing in it. It's just not my game.
Size of the opportunity is humongous. There is room for everybody. You have many more players apart from Zomato who actually enter both the quick commerce space and the food delivery space and the fast food delivery space also, the cafe Zeptos of the world, so to speak. And, even Zomato has come out with a bistro and likewise for Swiggy. And you'll have many more come through in the form of, let's say, JioMart or a Flipkart also announcing the quick commerce model. Size of the opportunity is very big. In retailing, and this be true for any form of retailing, you got to get your unit economics right. And if you get your unit economics right, that is to say per unit order or per unit quick commerce transaction, more than cost of capital, then the sky is the limit for you. And I think, Zomato has the first mover advantage. They have got the unit economics right. They have broken even. They are making contribution margin, which are positive. And now it's only about expansion into tier one, getting economies of scale.
All right, then moving on, India has actually taken a step further in journey towards developing its first made-in-India aircraft. Sources have told ET Now the Aviation Ministry has sought the Finance Ministry's approval for a special purpose vehicle that will take care of the development needs of this indigenous plane. Also, the project of India's first advanced light aircraft Dhruv will be studied for the key imports. My colleague Sumit is here with all the details. Sumit, over to you.
India has taken a step forward in the making of first made-in-India commuter aircraft. Sources tell us that Aviation Ministry has approached Finance Ministry to approve an SPV, special purpose vehicle, that will be the core of this aircraft. Well, the SPV will be working for 5 years and it will have a mechanism through which they will decide how to take experts from public and private sector and how will they go forward as far as making of this Make in India aircraft is concerned. Well, this aircraft would have a range of up to 700 kilometers. Earlier also, India has made aircraft, not but helicopter, like advanced light helicopter. So some cues will be taken from that also. Well, this project, ALH, was in fact done by India only, and many of these things were indigenously developed. So taking a cue from there, many of these things will be developed as well. This SPV is an important, we can say that, base of forming of this Make in India aircraft, because this SPV will decide how things go forward. There will be experts, finances, everything, but this SPV will be crucial. Later on, the aircraft can be manufactured by a joint venture company, single company, but this step in the direction of forming an SPV and seeking and a finalization from Finance Ministry is an important step in the Make in India aircraft program.
Sumit, thanks for all of those exclusive details coming by. Aviation is going to be an exciting space to watch out for in the year that's about to come. But on that note, Naresh, I'll come to you for your BTST trades. What's looking good right now?
So continue to be more defensive. First is the buy on Sun Pharma. The stock has, break out and has shown relative strength. The whole pharma pack looks interesting. So Sun Pharma with a stop loss at 1850, target price of 1900. Second is the buy on Container Corporation. The stock has corrected a lot, almost 25% from the top, trying to make a base around that 770, 780 mark. Expecting a bounce back here, stop loss at 780, target price of 800.
Right, so that is the BTST idea coming in from Naresh. Kunal, what are your BTST ideas?
So I'll go with the buy on PTM. That's a chart which has come back about the 1000 levels. Looks attractive at current zone. Expecting this move, to take the stock back towards 1060 mark over the near term. Stop loss could be kept at 980. And the second would be a buy on Devyani International, something which I flagged off in the morning. The stock is up, 5%, 6% broadly. It's crossed about the levels of 190. Looks fairly attractive. So would revise the targets to 200 and stop loss could be trailed higher to 185.
Okay, so Devyani looking attractive to Kunal, PTM as well, and for Naresh, it's Sun Pharma as well as Concor. Those are the BTST picks coming in for our viewers. But Naresh, want to come to you, want to get a technical check on Interglobe Aviation. This is a stock that has done pretty well on a year-to-date basis, and aviation is something that has regular news flow, but we've not seen much of a move coming in on this stock recently. How is this stock looking in on the charts, and give us a 6-month sense of what this stock could be like? What are the levels that could that Interglobe Aviation could fly to?
So the trend has been strong for the last 1.5 to 2 years. It continued to make higher tops and higher bottoms, topped out at 5,000, saw a correction all the way to 3,900, 4,000. But 3,900, 4,000 was the level back in May, June as well. And we made double bottom in October, November. So that's the lower end of the range. On the upper end, it is 5,000. So that could be the next breakout point. In the near term, 4,500 is a support, which is where it broke out from. So any dips closer to 4,500 is a buy, and eventually over the next 6 months, we expect it to cross about the 5,000 mark.
Anand, let me come to you and get your view actually on the entire life insurance space, because all of the counters actually saw a very sharp correction on back of regulatory and taxation concerns also around it. What's your take now? Do you think that it merits a relook post the correction now?
Is that for me?
Yes, it's for you.
Yes, absolutely. I think this is a space that, first of all, should be part of a core portfolio. There is no doubt that the regulations have changed and made it a little more competitive because of the fact that many of these companies rely on bank assurance as their major contributors. And, if you have to reduce the share there, especially if you're a parent, it's going to impact them negatively in the near term. But the question is, it impacts everybody. So to that extent, it's not as if it is selective or, there will be some which will benefit a little more than the others or will be impacted a little more than the others. But across the board, they have to rejig their portfolios a bit and see how they can go back to the areas that they can push through. The client base is still fairly large, though the number of policies sold is now fairly substantial. The value of policies is still fairly weak, and therefore, there is enough scope. So the runway is large, and this is a very sticky kind of business. You get into it once, you cannot get out. So overall, I think it's a great business to be in, and the valuations are not that challenging anymore because of the fall.
Okay, Kunal, also give us a chart check on what some of these names are looking like. SBI Life, HDFC Life, looking good on the charts?
Well, depends on the time frame. I think if someone is looking at this as a very short-term time frame, I don't expect that these stocks would show any kind of a major recovery. For example, SBI Life, HDFC Life have been two stocks which have fallen way below the long-term averages, and the manner in which these stocks had corrected in the last 1.5 odd month, I think that puts a lot of question mark to the near-term trend prospects for these names. The only solace which we have is from the the PSU insurance names likes of GIC, and New India Insurance. I think these are the only two names which have been looking fairly attractive, positive. There's trend momentum as well as volumes chasing into these names. But then the two stocks predominantly SBI Life and HDFC Life, nothing much to write about in terms of the bullish chart patterns for these names.
Right. Naresh, let me come to you and get your view actually coming in on the auto pack. How is this one looking to you, given the fact that we've also seen most of these four-wheeler counters see a downtick on back of the way how they've been reporting their monthly sales numbers. What's your take when you talk about four-wheelers in particular on the charts? Which one is looking attractive to you?
So if you look at the two major names, so Tata Motors has corrected from 1150 all the way down to 700, 750 levels. So it's a large correction already done. The stock had majorly broken out above that 600 mark, which was the high in 2015, 2016. So not much of a downside, even if you were to look at a longer term chart. So out here, it could be a bounce back case. The trend would take much longer to reverse. So a bounce back to 800 would be normal. But overall, the structure is still bad. At the same time, Maruti also, the stock has corrected from 13,000, 13,500 down to the 10,800 to 11,000 mark. If we go back to 2018, the stock had topped out at 10,000. So not a lot of downside. I would not expect it to break 2018 levels. But the structure is still weak. Bounce backs to 11,500 could see selling pressure. It's only about 11,500 we could call it a turnaround.
Okay, Kunal, give me a start check on what IndusInd Bank is looking like on the charts, because we've had news flow coming in today in terms of their auction that they're going to be doing. We have a brokerage note that, although has a buy rating, is also flagging off some major concerns coming in for the bank. The stock is holding up decently okay today, but on a year-to-date basis, it's among the biggest losers, a 40% cut coming in year-to-date. Now, would this stock be attractive after this cut, or do you think that more trouble is still being penciled in for the charts?
So I think over the last 1 month specifically, we've seen the pace of correction for IndusInd Bank to be much sharper over the last 3 months. We've seen the stock already correcting from 1500 thereabouts towards 900, 950. I think that was the range or the low the stock had made in the last couple of days. So which means that the stock has shed almost 500 to 600 points in just a matter of the last 3 months. Now, the most attractive part which I like about IndusInd Bank as a chart is that the stock is almost at a 30 to 35% divergence from its 200-day moving average. So that itself could be a very good zone where we may expect some sort of mean reversion to play out. But mean reversion is a process which plays out for a span of at least 1 to 3 months, if not more than that. Depends on the beta of the stock and how far or how the stock has fallen and how far the stock is from its long-term moving averages. So price-wise, yes, very attractive. Indicators-wise, very attractive. But whether IndusInd Bank could actually be the leader stock from the private sector banking names, that's the biggest question mark. Because if you expect that the Bank Nifty would recover and IndusInd Bank could be one of the stocks to recover, then I believe that a better alpha could be generated into other private sector banking names, and especially the large cap ones.
Right. Let's talk about the IT sector actually, Mr. Tandon. What's your view coming in the IT sector? No doubt that you have analysts that have also cautioned the fact that the valuations are looking stretched and the runway for the growth seems limited for these counters. But of late, we've seen a lot of interest come back in the IT sector. What's your take? Because there will be a lot of global factors at play this time for the sector.
Well, the sector is a global sector, and the argument that is being currently made in favor of the sector is that, the outlook looks a little better this year than it did last year at the same time. That said, the valuations are such that it is cheaper to buy Google than it is to buy any of the Indian IT companies, and the quality of the business you can make out is significantly worse. So I would think that, from a portfolio perspective, you would have to have some position in IT, especially if this is a sector which will likely outperform, just because it's doing better than last year in a market which is otherwise looking a little strained in terms of finding growth areas. So from that perspective, this could be an area that you may want to hold on to and not be totally out of. But I don't see the major excitement in the sector as such. It is not likely that you will have a major recovery. You will not get double-digit growth coming through, and you are not likely to see, and there will continue to be a sword hanging over the sector in terms of, developments in AI and so on. So net, not something that, you can take a view on in the long term, which is very positive as of now.
Okay, we're wrapping up for today's trading session. Just a couple of minutes left for market close. Kunal, Naresh, a quick outlook on what we can expect Monday's trading session to look like.
So hopefully we see a better momentum getting into the year end and some bit of NAV bump up as well.
Okay, Kunal, do you think 24,000 is possible on Monday? Do you think that's going to happen? Can we watch out for that? Can we be too optimistic when it comes to the Nifty's move on Monday?
Well, it would be slight optimistic. I would not say too optimistic. The only good part about the markets today is that we are now closing in very, very near towards the 200 moving average. For the last 4 consecutive days, if I include today, then maybe 5th, if we close below the average. This would be the 5 consecutive days where we'll be closing just a shade below the 200 moving average. If somehow we manage to come back above the 200 DMA, that's where I would believe that the momentum would come back again for the indices. So as of now, it's very, very difficult to call out because we're just, I think, 20 points or 15 points away from the long-term moving average in terms of closing basis.
Right, so looks like it's not Santa Rally, but looks like it is the Grinch that is at play when you talk about the Indian markets, because we have been sub that 24,000 mark. On that note, thank you so much, Mr. Tandon, Kunal, as well as Naresh for joining us.
If you like this video, then like, share and subscribe to ET Now.